Us now is Vital Knowledge founder Adam Crisafulli and Wilmington Trust head of investment strategy Megan Hsu. Guys, good afternoon. Adam, we got one more trading day, full day before the jobs report. ADP suggests a weak environment, as does the Intuit Small Business Index. We brought you here on Overtime yesterday. If we get weak jobs on Friday, is it bad news, good news, because the Fed might cut sooner, or is bad news with the unclear impact of tariffs, the Fed may be less likely to cut?
I think it's a great question. We've definitely had a lot of indications over the last couple of weeks that the economy is clearly slowing. I think if you were to get a really bad jobs report, it could be a positive, not so much for the Fed, but in that it could temper some of the tariff agenda. So we had a brief reprieve today with the 1-month delay on the auto tariffs for Mexico, Canada. But the month of March is going to see a ton of trade reports, and we have a lot of trade announcements and tariff announcements coming in April. So if you were to see the jobs report, which is the most prominent economic report the government puts out, if that's really weak, then perhaps it could be the pain, cross the pain threshold for the White House and cause them to kind of dial back even further some of their agenda on tariffs. Interesting.
Okay, so Megan, you have reduced risk in your portfolio, shifting away from large caps overall mainly. Tell me why, based on the uncertainty in this environment perhaps, and what you're diversifying into.
Yeah, so we've been seeing the economy and the markets as what we're calling a chutes and ladders economy. If you think about the old board game where at any point in time you could shoot up or down one or many spaces. And I think that really describes the environment today with the amount of policy volatility out there and how dependent those policy announcements are on the details. So we started reducing risk, taking a little bit off the table in small cap way back in November. And then a few weeks ago, ahead of really the peak tariff fears, reduced our large cap overweight. And it was really just a matter of trying to reconcile what the market was pricing in with the degree of risks out there. I think it's nearly impossible to predict how the tariff agenda will play out minute by minute. But what we know is that the market is still somewhat expensive. Valuations have come in a little bit over the past few days, but for the most part, it is pricing in a good deal of optimism, and we didn't feel investors were being properly compensated for taking on undue risk. So it was really a matter of kind of tightening everything up. We added a little bit to international equities, actually, where we were underweight. That turned out to be a good move, and then also added a little bit to some of our defensive asset classes, just trying to shore up those exposures.
Okay, so Adam, here in Overtime, we've got Marvell and MongoDB both about to report. You could see them both as longer-term data center plays, Marvell from the chip side and MongoDB from the kind of software disruptor side. Both of them are off their highs of the past year. You've got Zscaler, too, which is up today, I believe, even as CrowdStrike, a competitor, was not. What are we going to learn about sentiment, perhaps, for some of these growthier stocks based on how these respond?
Yeah, I think Marvell is really critical. That's probably the most quote-unquote macro of all those companies. Plays a huge role in the custom AI chip market. And, NVIDIA had decent results and guidance, yet the stock kind of came for sales. I think what I'm really looking for is not only are the numbers good, but how the stock responds to it. If it's another healthy report, healthy guidance, all the commentary around secular trends, if that all remains bullish and the stock trades as poorly as NVIDIA does, it kind of suggests that there's still money that is bleeding out of tech and moving into other areas of the market. So Marvell is definitely the most important name tonight for the broader market, in my opinion.